So moving it into a limited company means we'll only ever pay corporation tax on the profits. If we need to take the money out, which we won't in this particular case because we've got other income from elsewhere, but if we need to take the money out, then two or three things I think are really important that I want to convey to you. The first is, if you're buying a commercial building like this or any commercial building, if it has an option to tax, which in simple terms means you'll have to pay VAT on purchasing the building, there's two things you should consider. The first one is, if you're looking to do a commercial conversion, which is what we've done here, then you want to look at completing a VAT 1614D and give that to the vendor. And if they accept it, that means you don't have to pay VAT on the purchase, which is good, because then you don't have to fund that additional VAT, no arrangement fees, no interest, no getting money back from HMRC, all that rigmarole. But you also save money on the stamp duty land tax, because if you buy a building for £1 million and then pay 20% VAT, which gives you 1.2 million, you'll have to pay SDLT on the 1.2 million price. But if you don't pay the VAT, then you've only got £1 million. You're going to save the SDLT element on that £200,000. So that helps. If you can't do a VAT 1614D, but the previous owner has a tenant in there, because let's say the tenant's vacating in 6, 9, 12 months time, that can happen too. Then you can do a transfer of going concern, which again means you don't have to pay VAT on the purchase, but you'll have to register for VAT in order to take over the transfer of going concern and then charge VAT on the rent to the tenant. So those are your two options to save the SDLT and the VAT, which is really good. By the SDLT, I mean the SDLT on the VAT element. So when we purchased this building, we bought it as a partnership. We then obtained planning permission, and planning was granted for 12 flats. So we had an uplift in the value of the building, and then subsequently it was transferred into a limited company. There's a couple of benefits. The one big one is you have an uplift in the base cost when the property business moves into a limited company, which is good and helps you reduce capital gains tax going forward, although obviously companies don't pay capital gains tax, but you pay tax on the gain by way of corporation tax. So that helped. Secondly, if we kept this property in our own or in the partnership name and then made profits, which we will do when we start renting it out, then the challenge is, obviously, if you're a higher rate taxpayer or an additional rate taxpayer, you've got issues with Section 24 mortgage interest relief, and obviously depending on your total income, you've got to pay tax on all the profits. So moving it into a limited company means we'll only ever pay corporation tax on the profits. If we need to take the money out, which we won't in this particular case because we've got other income from elsewhere, but if we need to take the money out, then we pay income tax on the money we take out by way of salary, dividend, bonuses. But that's not going to happen in this particular case, which means we only ever pay corporation tax. You then keep the rest of the profits in the company, build it up. You can use those profits to buy your next development or fund a future development. So that was a big saving for us in terms of the base cost uplift. Saved us in excess of £125,000. And the saving on the Section 24 and the personal tax, because it's in a limited company, is going to amount to quite a few £1,000s every single year. So that's quite big. I'd say probably £15,000-20,000 per year if we add it all together over the next 5 years. Gives you again £75,000 to £100,000 plus. So bear those two things in mind. First one is buying property, having to pay VAT because there's an option to tax. See if you can work around that with the VAT 1614D or transfer of going concern. And secondly, if you buy it in a partnership, see if you can subsequently incorporate, or if you have an existing property portfolio in a partnership, see if you can incorporate that. It might work for you, it might not, but again, you just got to do the numbers. For us, it worked especially well, and that's why I'm sharing it with you today.